Good morning, everybody. Hello, and welcome back to another Market Open. It is August 7th, 2023, 9:20 a.m., and today is one of the most anticipated days that I've been waiting for, and that I'm sure a lot of you have been waiting for in the stock market. It is Palantir's Q2 2023 earnings. It has been a long time coming for this. For the past 3 months, we've been anticipating what they've been able to do. I want to go through a little bit of my expectations. I have another video coming out at around 11 a.m. I'm also highlighting some of my expect a little bit here in the Market Open. And then at 3:45 p.m. Eastern, we are streaming. It is time to see what Karp & Company have been able to do for the past 3 months. It's time to see if some of this AIP trajectory that they've been planning for is on the right path. It's time to see if they can live up to a little bit of the AI hype that is rallied shares 183% year to date. It is time to see what they're able to do. And so it's going to be pretty exciting to cover the company. You know, this is one of the most interesting companies in the world. So I'm very excited, very blessed and privileged to be able to cover it. I'm very excited for people to be interested in the coverage. And it is one of those companies that I think is a generational opportunity. And so this quarter does not define the company by any sense of the imagination, especially given its Q2, and SaaS companies in Q2 tend to not do as well as Q3, Q4. But it will be good to see a business update. I mean, if they can get GAAP profitable again, which we all expect for them to be able to do, that is 1 quarter away from being fully GAAP profitable to be included in the S&P 500. So a lot of different milestones can be achieved on this earnings, and it's going to be excited to see them get to this point. Mr. Seymour Duck, thank you for the $2 super chat. Mark LeBlanc, Van Bush, Sethi Roth, Nicholas, Arrow, Jagger Float, Alice, Axel, Jungle, Martin, Ronnie, Iceman, JJ, Jared, Kevin, Drew Jr., Tess, Kim Yoon, D. Williams, Joseph Villegas, Felicia, Lenny, Ramos, Dominico, Rich Webster, Jubei, TJ the Wheel Deal, Monty, Aaron Lidman, CJ Paw. Thank you all for being here. Stefan, Duke Trillions, Trusty, Benny, Corey. Thank you all for being here. Benny says, morning, Amit. I have some pics I've screenshotted that I think you'd be interested in, but I don't have Twitter. Yeah, Twitter's the easiest. I mean, you can email me, amit@dailypalantir.com. You can send those on there, but Twitter would be the easiest as well. All right, we are here. First of all, before we get started, please put in the chat where you are calling from and sort of, well, what you're eating for breakfast. I know a lot of you aren't eating breakfast right now. I know it's a weird thing, but I love knowing in the morning what people are eating, especially on the day of Palantir earnings. Only reason I'm asking is Sachin posted a picture of him eating eggs and lemonade. And I was like, oh, this is interesting. 4 eggs before Palantir earnings. So where are you calling from? Where in the world are you right now? Are you at work? Are you eating breakfast? Are you watching on your TV? I would love to know, and I'm going to get through them as we get into what's going on in the market. NASDAQ at $13,909. We've got Palantir at 1830. It's actually up 0.55% in the pre-markets. Now, here's one thing I want to share from Chad, who tweeted this on Twitter that I think is very interesting. We've gotten a bunch of different price target upgrades on Palantir, or at least, sorry, not price target upgrades, earning upgrades for expectations. And I don't think they make a lot of sense. So, for example, Citi analyst Tyler Radke raised the price target on Palantir to $10 from $6 while maintaining a sell rating. He says Palantir shares have rallied 183% year to date despite lacking a material inflection or improvement in fundamentals. Beyond short covering macro factors, we believe this is led by Gen A optimism. While we expect hear signs of increased engagement, customer momentum, we believe large Gen A contracts are unlikely to be. Pricing motion is still in the infancy stages, which is true. I mean, Palantir still doesn't have a full pricing strategy yet. Now, what he says is that we see a mixed setup heading into Q2 earnings with additional SPAC-related bankruptcies pulling forward revenue, getting staged for a mechanical upside, though with limited flow through full-year targets. So basically, they're saying because a bunch of SPACs went bankrupt, they're going to be able to take those SPACs that went bankrupt and recognize the revenue from the SPACs that went bankrupt. And as a result of that, they're going to beat on revenue. And so he's maintaining, he's upgrading his price target from $6 to $10. I've seen another report from a different financial firm saying, oh, we expect $552 million in revenue, even though management only guided $532 million because they're going to take SPAC bankruptcies and pull them forward. Now, I don't know if these are correct. I don't know if these are wrong, but it does feel really weird in terms of management said 532 million. And now all these analysts are like, oh, they're going to get 550 because of SPAC bankruptcies. And it's like, to justify SPAC bankruptcies as the reason for why they're going to have massive amounts of revenue, and then you're going to punish them if they don't get to 550 million, right? Like you're artificially raising the expectations, which I'm going to talk about in the video that I have later today. I thought that was a little weird. And so some of these reports that are coming out before earnings are definitely the finance and media playing games that they want to play in terms of overall artificially raising expectations, when in reality, you know, Palantir did not put that burden on themselves. They said 528 to 532 million. So that's what I'm expecting in terms of expectations. Now, the other reason this price target thing is stupid is because the guy said, oh, price target of $6 for the past year. The shares have quadrupled or tripled. And now he's like, I'm going to raise the price target to 10. Why are you raising the price target from 6 to 10 after the shares have gone to 18 when you have no justification for that extra $4? It's like if the valuation wasn't justified at 6 and nothing has changed, as he said in his report, why is the valuation justified at 10? It's kind of these stupid things that exist in traditional corrupt financial media by all these basically monopolies that have control over information that truly dictate share price action. It's the reason why Palantir wasn't loved by the street, because they chose to do a DPO. And it's the stuff that hopefully retail investors have a little bit of a fighting hedge against, because we can call out bullshit when we see it. And the Palantir community is really good at calling out some of this bullshit. I mean, even the comments underneath this post right here are just glorious. Arnie has a great post. He says, this sounds like I doubled the price target to feel less dumb. Because it's true. You can't say it's $6 and then say nothing has changed in the year, so we're just going to put it up to $10, even though we still think it's overvalued. You can still think it's overvalued, but the idea that your price targets have any basis in reality are just as real as $18 having any basis in reality in terms of valuation. So to me, a lot of these price targets are kind of ridiculous, and it'll be interesting to see what Palantir is able to say to either shut some of Wall Street up, or Wall Street's going to tank the stock if they're not able to live up to artificial expectations. Regardless, it's what we're going to see happening today on earnings. Afternoon from Dublin, Ireland. We got people in Dubai. It's almost the end of the day. Beef and rice in Philippines. Montana, drinking coffee. I've never met anyone from Montana, so that's really cool. Malaysia, having dinner. Calgary, Canada. Coconut Creek, blueberries. Portugal. From Moon, eating dust. I love that. Hopefully Palantir is there today. Michigan at the 9 to 5. Cali, working OT at Cali. Houston at work. Coffee. Alaska. I love it. I love it. I love it. Thank you all for being here, no matter where you're from. Really appreciate it. It means the world to me. Amit, are you nervous or are you excited? I am both. I am nervous in the fact that I think, again, the street has been artificially raising expectations for earnings because of whatever stupid justification agendas they have for Palantir, when in reality, 532 is expectation. If they get to 540, 550, or 533, that should be either in line or a massive beat with expectations. But to say they're supposed to get 550 because we're expecting 550 is stupid, because that's not what management guided. And, the street is just forgetting about expectations. I'm nervous on the hand of, there are two scenarios where Palantir drops today. And there's one scenario where Palantir wins, and Market Open will have in about a minute and a half. The scenario in which Palantir shares rally is where we beat expectations and we raise guidance. That is the really main like scenario in which Palantir goes up today. So, we raise guidance to XYZ percentage growth, raise EBITDA, whatever, customer count is raised massively, boom, shares go up. The way we lose is if we come in line with expectations and we don't, beat significantly on anything. So we do exactly what we said we were supposed to do, and the street's like, okay, you're not growing as much as we want you to grow, even though you come in line with guidance, we're going to sell it off. That's one scenario. The second scenario is we beat slightly. So we said 528 million in revenue, we come with 535. And the street's like, that's only a $7 million beat. It's not enough for us. We said we were going to be GAAP profitable. We're, GAAP profitable. We don't, we're 1 cent a share instead of 2 cents a share on a GAAP basis. The street's like, okay, you're GAAP profitable. That's fine, but you're not becoming more GAAP profitable than we thought you would become, even though this is one of the most challenging macro environments, and Palantir is still theoretically a startup and they're finding a way to become GAAP profitable. So we don't care. We're selling you off. So if the street finds any justification for the $18, $40 billion valuation to not be justified in terms of the overall growth coming from Palantir, then we're going to tank it. Very similar to you with this comment, Ray. LOL reminds me of Tesla. Good news, tank it. Yes. Remember, people investing in Tesla in 2018, 2019, when Tesla was unprofitable and relatively unproven, they were betting on a future that would be proven one day. I think that is the same scenario for Palantir. You're betting on a future that will happen in the world of AI, software, modern enterprises, etc. And so if there's any good news that's not good enough for the street, because we are not a darling of the street yet, then the stock will be sold off. And I don't know if we'll ever be a darling of the street, but eventually the street will have to buy it if the results are there. So the only argument for me growing is and shares rising is if we beat decently. And if we don't, then I do think it is going to tank. But as we talked about on the podcast, there may be scenarios in which buy the dip makes a lot of sense. And we'll talk about it later today on the morning stream. All right, 9:30 a.m. Palantir earnings are today, August 7, 2023. The stock market is now open. Wake your ass up. Here we go. Palantir earnings are today. I'll be streaming it live 3:45 p.m. Eastern Standard Time, 1836 on Palantir, up 5.5%. in the market open. It'll be really interesting to see if Palantir sells off going into the day, or if it is anticipated and people buy it up going into the day. It's going to be really interesting. I have no idea what's going to happen, but it'll be unique to see how the stock moves as we get into the market open. Uber at $44.76, SoFi $9.53, up 0.53%. Apple took a beating. Apple has just gotten demolished. It was at 197 last week. Now it's at 182, back to a $2.85 trillion company. Basically, the street was like, we're not going to give you a 30 forward PE and you're growing negative 0% year over year. You're not growing year over year. Facebook has a 23 PE growing 13%. Google has a 24 PE growing 8%. Apple has a 30 PE growing 0%. So the street just was not able to give it to them. PayPal at $63, up 0.45%. And Nasdaq 13,975, SoFi 954, Palantir 1819. All right, so you got the first red candle on Palantir. Palantir falling just a little bit. Amazon at 140, maintaining its earnings debut high. NEO at $15.18, up 3%. Meta at $314, up 1%. Tesla down a little bit, $253, down 0.15%. Nikola up 7% at $2.06. Robinhood down a little bit as well, $11.27, down 0.27%. Tupperware down 10%. This is the one that's rallied 400%, so I'd be careful with that stock if you're in it. Shopify, 57. Wow, the street took it down. It was at 68 last week. I guess the street did not like earnings. I didn't think their numbers were that bad. The street took it down. Unity at $39, falling below 40. This was at $50 last week as well, or 47. Enphase at 138. Street's taking this one down as well. Nvidia's up, Microsoft is up, Google is up, Pinterest is up, S&P at 449. It's up today, but below 450. Netflix is up, AMD is up, Disney is up, Key is up, Zion is up, Truist is up. So it's interesting. So all of these regionals and big tech is up. And then you got some of the mid cap, small cap that's down. That's a really interesting scenario shift. Robinhood, Nikola, Uber, Palantir, these stocks were up over the past couple of weeks. And now we're seeing a little bit of a transition into big tech. And one of the reasons might be because if inflation is reaccelerating and the market is expecting another rate hike, then the money is going to want to go into companies that are less speculative. And Robinhood, even though it's GAAP profitable, it still is more speculative than something like Google. And Google, Nvidia, Microsoft, they might be beneficiaries of the shift from from mid cap into large cap. This is really interesting to see all of these names that are green and some of the other ones that are red. Yeah, look at this: Square, Roku, more Upstart, Affirm, Arc. More speculative names are red today, and more big tech names are green. That is so interesting. You would expect everything to be red or everything to be green, but there is a obvious shift between what is red and what is green today. Snapchat's red, Spotify's red, Regional's up, Roblox is red, Rocket Labs is red, Lemonade is red, ArcG is red, and then you got all these regionals, all these banks that are green. Very interesting. All right, where are we at on Palantir? Palantir is $17.98. So we are below $18. So we're seeing a sell-off going into earnings, and now it's at $18.01. To be honest, I would love a sell-off going into earnings versus a buy-in, because if we're at $16 going into earnings, I think we have more room to rally versus if we're at $20, it's going to be a little bit harder to rally. So it's going to be interesting. And all this is on the backdrop of Dan Ives saying, hey, $25 price target, right? So we got Dan Ives saying we got a $25 price target. It's a very weird time he released that report. And then on top of that, we've got a bunch of different things going on in regards to the price action for Palantir, with all these SPAC reports coming out saying that we pull forward revenue expecting $550 million. So it is going to be really, really, really interesting to see what Palantir is going to be able to do today and see where it comes from here. Thank you, 814 people, for being here. Really appreciate you being here again. Palantir will be streaming earnings at 3:45 p.m. Eastern on this channel, and so it'll be an exciting day to see what's going on with Palantir. Now, I want to get the attention real quick back to this report for 2 minutes, and then we're going to move on to Bank of America saying that there's not going to be a recession, which maybe is not the best news, not the worst news. If you're new to the stream, if you just joined, again, what Palantir reports are doing are artificially raising expectations on guidance. So you've got Citi analyst Tyler Radke, that's been a big bear on Palantir, raising his price target from $6 to $10. No justification for why he's raising this, other than in Q2 he thinks there's going to be a ton of SPAC bankruptcies, and what happens when a SPAC goes bankrupt is all the shares that you have of that company liquidate, which means you pull forward all the revenue recognition again. So they're expecting Palantir to do $550 million in revenue in Q2, which is significantly above the $532 million that Palantir guided for. There's another couple of reports that I read last night also using this exact same logic. And it is so weird when multiple firms on Wall Street coincidentally come together a couple of days before earnings, and they're like, oh yeah, that 532 million that, management guided for, we're thinking it should be 550. Like, that's our expectation baseline because of whatever convoluted way we came up with this number, which in this case is SPAC bankruptcies, pull forward revenue, et cetera, et cetera. And it just looks really weird, in my opinion. This is not what management guided for. To me, it artificially feels like they're trying to pump up the stock price in case they're going to do a massive sell-off. If Palantir gets like 540 and like, oh, well, it's not 550. We expected 550. It's like management guided 532. Just like last quarter, management guided 506. We came in with 525. And that 525 was because we had $17 million of treasury bills, interest from 3-month T-bills, which is why we were able to justify that raise. So you can't use that justification or your convoluted SPAC bankruptcy justification to artificially in your agenda-oriented scenario say, hey, Palantir should have 550 million in revenue, when that's not what they said. So we're seeing a lot of stuff happen in the financial space, and it's very weird to see how they're kind of coming together and putting this stuff out. And then on top of that, price target upgrade from $6 to 10. It's like, first of all, why was it 6? What was the justification? And then why is the justification now 10? It's this random nonsense that happens before earnings with a lot of companies. And unfortunately, as retail, we don't have a ton of control over this because, these financial institutions, they have the heart and ears of Wall Street, and Palantir is not a beloved child of Wall Street yet. So really weird for how it's happening, but we'll see kind of where it goes from there. Analysts can't buy the sandbag guidance, can't blame them. I don't know if guidance is sandbagging for Q2. For Q3, Q4, I would say yes, it may be sandbagging. But for Q2, we know SaaS companies, ask Snowflake, it's not easy to put up a good Q2. Palantir now at $17.97. So could Palantir be sandbagging? Yes. But I don't know if they're sandbagging for this quarter. And the problem is they're probably going to get hurt for this quarter because all these analysts now think that they're sandbagging or that they should be sandbagging, which is not the best thing in the world. Enphase, we've got at $137. Wow. Enphase is coming down. There you go. Now, does it drop below 130 into that 117 range? Maybe, but this is also another clear rotation we're seeing from small and mid caps. Remember, Enphase is only worth $18 billion a year. I know it's growing like 50-60%, but it's still only $18 billion. It's trading 20 times next year earnings, which is incredibly cheap. Now it's even lower than that. But it is a small cap at the end of the day, or I guess, I don't know, 20 billion is a mid cap, small cap, but it is a smaller company than something like a Google or an Amazon. And so we're seeing a lot of red in that trend. Again, Google, Microsoft, Nvidia are up today. It's not like a whole market thing is down. There are some stocks that are up, and there are other stocks that are clearly down. Fubo, a great example of a stock that's down. SoFi is down. There is a rotation that we're seeing right now. Palantir now at $17.90. So we're seeing a bit more of that rotation, potentially on the hope that inflation is going to accelerate and that the Fed might have to raise rates even more again. Let's go to Bank of America. Bank of America's Kerry Hall saying that we no longer expect a recession. Sometimes it's good when these banks say it. Sometimes the opposite happens because they're actually shorting the market. So we'll see what her logic is and if it makes any sense.
The markets and the economy in light of Friday's jobs numbers and with inflation upon us this week. Joining us now is Kerry Hall, Bank of America's Global Research Head of Small and Mid-Cap Strategy. Welcome to you.
Thanks for having me.
Although when you're small and mid-cap strategy, do you get bogged down with the macro, or are you top down or are you bottoms up? I mean, what do you think is more informative right now?
Both. I think, we're fundamentally seeing a good backdrop with earnings season. Earnings are coming in better than expectations kind of across the cap spectrum right now. Guidance has been much better than expected. And then on the macro, our economists at B of A just revised up their economic outlook, so they're no longer expecting a recession this year.
So would you say, just out of curiosity, I'm not trying to start some infirm drama, but were you guys more constructive on the outlook for earnings? You know what I mean? Like when you looked at the companies, did you worry a big slowdown was coming? Or it feels like the macro has had to catch up to what's happening on the company level.
Well, we were expecting initially, a more negative earnings backdrop and revise that up as well. The earnings backdrop, we're still expecting roughly flattish growth this year, better growth next year. But I think, now that we're expecting a soft landing, a lot of the segments of the market that have been pricing in a recession, and there are pockets of them, small caps being one of them, we think are poised for, at least near term, somewhat of a rebound. And, I think the fact that we could be shifting from more of this downturn backdrop to early cycle in terms of a regime is typically positive for cyclicals and smaller stocks.
I was just looking.
Okay, so her logic is that smaller stocks have already priced in a recession, or at least their stock prices have priced in a recession. And because it's more unlikely to happen, we're going to see a rebound. It's not the worst logic in the world. And the reason for that is because just look at Robinhood. It's at $11 right now. Robinhood was stuck from $7 to $8 for about a year, all of 2022. Robinhood goes back to even $9 it's trading at basically 80% of cash, right? $6.5 billion of cash. It'll be at an $8 billion market cap. At that point, there are institutional investors that are just like, this is stupid. We are buying literal cash right now. And so it doesn't make that much sense as long as nothing changed with the fundamental thesis of the business. So you could argue that some of these stocks are definitely priced in for a recession. And if they go even lower, like PayPal is at 63. Does it go below 58? Has something that changed that dramatically with the business to go below its all-time low? You should be able to see a rebound.
Looking at apparently some of the like cardboard corrugated box, like these kinds of earnings have been coming in, and they're seeing a little bit of a turn, and people think then the ISMs are going to follow, and then we're going to be off to the races. Just real quickly, you mentioned that small caps are priced for a recession. What tells you that? Because the other stat that gets thrown around is 40% of the Russell 2000 is not profitable. So what are you watching there that kind of shows that?
Right. I mean, I think
this is a good question. If 40% of the Russell 2000, which is an index of the small cap companies, are not profitable, that's almost 50%. Why don't they tank the bed at a point where interest rates are above 5%? And if you're not profitable, the market's not respecting you when interest rates aren't zero.
Near term, when you look at positioning, multi-cap managers, their weights in small cap stocks is at record lows. Flows have been extremely negative this year. You're starting to see a little bit of a turn there. Valuations are extremely cheap relative to large caps, near historic lows, and usually valuation tends to be a good longer term predictor as well. So if you're thinking about large versus small over the next decade, even it could be a good time to own small. But I do think, to your point, medium term, once you see this catch up rally, then it makes sense to be more nimble and selective and cautious in small caps, given some of the refinancing risks, given some of the fact that a third of the index is non-earners that aren't profitable.
Which is always true, right? I don't think that's is that a new factor? Is that always?
Okay, so her basic logic is essentially that people and institutional investors don't have enough exposure to mid caps. Now, the way she's wrong on that, by the way, Apple's below $180. I last saw them at 179 January 2022. It's been a long time, so I'm sure they've been there after that. But last time I remember seeing them, because I was making a video on them in January 2022, and so I explicitly remember the stock price back then. 179. Look at that, 179 right now on Apple. So Apple just got beat up by the market. This is not the best thing for the market. Apple is 7.5% of the S&P. Her argument right now for Bank of America is that most institutional investors don't have enough exposure to mid-cap companies. And she's right about that. Most of them have been stuck hiding behind Amazon and Meta and Google and all those companies. But at the end of the day, NVIDIA, at the end of the day, if those mid-cap companies are not profitable and they're not showing unique levels of growth, I don't know if institutional investors want exposure to them. So the idea that a recession is not going to happen because these mid-caps are going to get picked up by institutions, I don't know if that's the best logic. Now, granted, if CPI comes in on at 2% or 2.7 by, I don't know, November, December, we're going to be in a good spot. But we've got to get inflation down to a point where the Fed starts to lower interest rates, or I think it's prudent that they'll start lowering interest rates by the first half of 2024. And then I think institutionals will load up on small caps, because at that point, small caps are prone to rise if, interest rates are not above 5%. But it's going to be interesting to see kind of how that plays out and where that goes from there. Palantir now at $17.93. What are we expecting from Palantir for earnings? By the way, shout out to 925 people for being here. Thank you so much for being here. We will be live streaming Palantir earnings at 3:45 p.m. Eastern. I am blessed, privileged, and honored to be able to provide coverage on this company and for people to care about some of my thoughts. It's the most interesting company in the world, in my opinion, and I'm excited to cover and be a small part of their journey over the next decade to see what happens over the lifetime of Palantir, and especially what happens today on Q2 earnings. Now, what are we expecting for Palantir? Here's some of the revenue numbers that I'm expecting. I'm expecting $532 million in revenue, so on the high side of their guidance. I'm expecting GAAP profitability, at least of 1 cent of GAAP profits, probably 5 cents of adjusted EPS. I'm expecting customer count in the 400 range. So we were at 380 or 390 last quarter. I forget which one exactly. I believe it's 380. I'm expecting around 405 to 415 in terms of customer count. That would make me very happy if we can get there. If we can get to 430, 440, then that's going to be a really good opportunity as well when it comes to customer count. And I'm expecting more actual qualitative feedback from the CEO, Alex Karp, on what is happening and what is going to happen with AIP. I was actually listening to Alex Karp yesterday, and I want to play a little bit of what he was saying from Q1 earnings, because I think it's going to be really interesting to listen to, just like 2 minutes of it, when he was talking about what the trajectory is for the company. When he says, he had some pretty blockbuster quotes. He said, our goal is to take the whole market. Why did he say our goal was to take the whole market. He said our goal was to take the whole market because they had no pricing strategy. And the reason they had no pricing strategy, which I want to get more clarifications on in this quarter, is because he believes they have a monopoly in terms of actually implementing enterprise AI, which is very similar to what Dan Ives said a week ago around Palantir being the only reference point for different chief executives that want to implement a AI-based strategy in their company. So when Karp says we want to take the whole market, we don't have a pricing strategy. The reason we don't have a pricing strategy is because we're giving away the product and then you, the customer, tell us how valuable it is to you. And we've seen in the press releases over the past couple of months, companies coming back to Palantir, signing multi-year extensions with them after working with them for the past 2 years in 2020, 2021, and 2022, because the software was valuable to them. And one of the things Arnie brought up on the Palantir Weekly podcast that I think was a really important point, and I believe in heavily as well. The buy the dip opportunity for Palantir today exists as follows. If customer count goes up and revenue either comes in line or misses or slightly beats and the street sells it off because revenue is not good enough, because GAAP profitability is not good enough for their expectations, even though being GAAP profitable to me is really important in and of itself, that's when you buy the dip. To me, the only buy the dip scenario really exists is if the street sells it off. Let's say the street gives it back to $11, but customer count is up. And you can tell because you're an actual investor, you're a retail investor, not just judging by the numbers. You're looking at what Palantir is doing with companies like the Cleveland Clinic and Jacobs and Westtrack and Panasonic. And you're seeing how they integrate themselves into a company, basically become the entire operating system, get a shit ton of pricing power because now they have all the leverage, charge you a little bit right now. And then in the future, as you can't get off their product, you have to pay more and more and more because there is no other competitor. There is no other platform that can ingest your data and provide you the insights in the way that Palantir is able to do. If that happens, then my expectation is that the dip should be bought given revenue acceleration and revenue growth will come as a result of increased customer count that will happen in the future, i.e. the revenue recognition. But that's the big thing I'm looking for on these earnings and seeing kind of where that goes from there and how it's going to happen. It's going to be very, very interesting as well to see how they're talking about the Ukraine war. That's another thing that I'm really interested in. Like, are the expectations from the revenue recognition, given all the Ministry of Digital Transformation partnerships you've signed and the overall software that you've been able to license to Ukraine, is that going to come in anytime soon? I'm not sure if any analysts are going to ask about that. I'm not sure if they're going to specifically talk about that, but that is a question I would ask, which is like, what can we expect in terms of the trajectory of growth from revenue from that part of the world? And maybe even the butterfly effect of all these other different partnerships you've been able to create because of that. Remember, they signed a partnership with Alina Svitvolina, one of the best tennis players in the world, who's from Ukraine. They didn't do that for no reason, right? They did that because they know there's opportunities to capitalize on a new emerging market in Ukraine and overall in the Baltic states that need more defense spending. And that's why they went to get something from Palantir. I want to play a little clip of Karp talking just a little bit about some of the thoughts he said back in Q1. I think it's going to be important for those that haven't heard it in a while, because he was speaking a little bit more seriously about why this is their ability to capture the market. And so let's listen to this for like a minute or 2 minutes to get ready for today's earnings. Thank you for 1,000 people being here for the market open. Again, we will be streaming at 3:45 p.m. Eastern. Palantir Q2 earnings. Today is the day. Let's listen to Karp and prepare ourselves from 3 months ago, what he was saying back then as we get ready for
Battlefield. For special operators, Foundry, which needs no introduction. It's called generative AI. And so
specifically, he's gonna be talking about the AI opportunity here. And this is just a good reminder to listen to before we get into Q2 later today.
We had built these precursor technologies since inception, and also biases. So how would you interact with an algorithm where you expose only the part of the enterprise that you want to expose, need to expose? How would you do a handoff when you're deciding to make a lethal decision? Who makes the lethal decision? What data sources are used? How do you map the knowledge and wisdom of your enterprise onto the external database? And then with the rise of large language models, how do you impose that on the large language model? How do you take what's useful from AI, especially in a large language model context, without hallucinating your way into a disaster? How do you expose sensitive parts of your enterprise that need to be exposed while protecting parts of your enterprise that should never be exposed, not just in the classified environment, but if you're working in a hospital context, not exposing healthcare personal healthcare data to a broader LLM run by a third party. How do you do this in a context where some people are technical and non-technical? How do you expand our offering? And this is one of the big advantages of the current revolution to people who have very technical needs but don't know how to wield them. And in general, our business has been a business driven by moral imperatives. I don't want to make this overly philosophical.
But he will make it overly philosophical. And that's why I fucking love Alex Karp. Anyone saying that this guy is not a good CEO, that he's not an operator, that doesn't understand business, that should be replaced as a CEO, that doesn't really get Palantir, does not understand Palantir, does not understand the company, does not understand the vision. And that's okay. You don't have to understand the vision of this company. You don't have to invest in this company. But to disrespect this man who's been able to take Palantir to new heights is, in my opinion, absolutely uncalled for. And what he's talking about here is the moral imperative, which is why he wrote that Oppenheimer article for the New York Times around AI. My assumption is that moral imperative and Palantir building their products with this philosophical essentially imperative to do good for the world with AI will translate to increased customer count and increased revenue growth. It might not happen this quarter, but it will happen over the long term, because you cannot be a company in possession with this level of data, with this level of sophistication of a product, and then misuse it or use it in a way that leads to bad outcomes, which is why they've never worked with Russia and China. And so there is a bull case to the philosophy of their company in interacting with the product of their company as well. And I think Karp is the guy to be able to lead them to that promised land.
Although in some ways I'd prefer it. But when you look at the history of Silicon Valley over the last 20 years, there's in a weird way, a tacit alliance between the way in which our maybe adversaries think of the world and the way in which many people in Silicon Valley have thought about it. Essentially, we will use data to serve our interests, not inherently the interests of the people, meaning it, in our context, to be monetized. And we have always believed in a moral imperative where the human and our governments would define the context in which data and algorithmic and now large language models implicitly would be controlled. And so that looked like a weird philosophical bias, but in fact, that philosophical bias allowed us to develop branching, allowed us to develop ways of doing handoff technologies. It allowed us to think broadly about what it means to be in lethal situations and behave ethically. It now positioned us to be able to launch ways in which to deal with large language models that is a once in a generational opportunity.
What he's saying there about this once in a generational opportunity with LLMs is built off 2 decades of how they philosophically thought about data organization in the world. And that's the key point in this last 30 seconds. He was like, look, this all led us to think about this in different ways. And that's exactly what Shyam Sankar said when he went on a podcast, saying the reason LLMs work is because we created ontologies and we were thinking about how to structure data before anyone was thinking about how to structure data in a meaningful way. And as a result of that, LLMs are natural to us, which is why AIP was rolled out in literally 2 months. And so that's what we're kind of seeing from Karp speaking about this stuff in a more broader sense. Last thing I'm going to share for today is this one tweet by Amir. I think this is a really great tweet. And for the 1,000 people that are here, this is probably the last thing you want to see before we end out the morning stream for Palantir. Amir, I would definitely follow him on Twitter, EM013L. He put together a short list of the things he's looking for in today's quarterly report. And I think this is something that everyone should be looking for as well in the context of Palantir. So, number 1, he says reacceleration of customer growth quarter over quarter. Since 2021 Q3, we have been in a downward trend with customer count, with the push since Q4 2022 to shift the narrative with a plethora of media appearances, AIP cons, and gap profitability to appease Wall Street. We should be seeing growth and acceleration. In the latest Palantir dossier published by EtherSquare, who takes a bunch of backlinks and tries to find companies that are working with Palantir before they're public, we can see a large increase of active pilots. That means potential customers, not revenue recognition, but pilots that will turn into revenue over the next 2 years. This should start to be recognized. AIP is too soon to recognize in Q2, in my opinion. And as you can see, we have a chart there. We're at 391 customers in Q1 overall total. Back in Q3 2023, we were 132. The rate of growth has declined. As you can see from here, we were growing at 20%, then 16.7, 16.9, 9.7, 10, 8, 6. So hopefully the rate of growth increases this quarter above 6.5%. So even if we come in at 6.6% increase in customer count, that would be accelerating growth. So let me actually do the numbers right there, that would be about around 20 more customers. If we can get around 20 more customers, then we will be increasing on our customer count growth rate. Second, similarly to client growth reacceleration, we have seen a steady decline in net dollar retention since it first started being reported. I would be very disappointed if this kept declining. I'm expecting 115%, but an acceleration is the most important aspect to look out for. Net dollar retention is also very important. We historically have had very high net dollar retention. And so that going down is not the best for our existing clients because we want them to keep spending more on our platform. And if that's going down, that means they're not spending as much as they were before. So you would want to see an acceleration of that. If they can recognize some of the AIP contracts, which again, I don't think they're going to recognize a ton because it's Q2, then some of that should accelerate NDR if there's existing clients already paying for something like AIP. Third, stock-based compensation has been on a good downward trend, being close to industry standard as of Q1 2023. Unfortunately, we received news in the Q1 ER that this is likely to increase as Palantir continues aggressive hiring, which on the backside should increase customer count if you're increasing aggressive hiring, if you're hiring more salespeople, theoretically. I'll be satisfied if we keep SBC as a percentage of revenue below 25%. That's below the TTM SBC as a percentage of revenues of 26.69%. I agree with that as well. Look at Q3 2020. We had 293% of our revenue as SBC. So that means we paid triple the amount we generated in revenue in stock-based compensation. That obviously has declined pretty massively, and now it's industry standard over the past 2 years. We're probably going to see a slight acceleration of it above for this quarter, but overall for the year, we should see it to be around 23 to 25% of revenues. And I agree with Amir, if it's below 25%, then that would be really good as well. Fourth, I want to see a reversal of the remaining performance obligation trend. This is guaranteed contract revenue, which likely any other metrics have been in decline. Keep in mind that this is different from total deal value, as total deal value includes optionality and is not guaranteed in the same sense as remaining performance obligations. So total deal value is $3.6 billion. It's up 60% year over year. That doesn't mean we're definitely going to get that revenue. That means that is the value of the deals to eventually, get. But remaining performance obligation is like literal money in the bank that we have to be able to get. So Palantir in 2023 Q1 had about $936 million of RPOs. And so the revenue that was recognized was around 534. So we want to see this number go up because the more this number goes up, the more revenue we have to recognize in the future, which means the more we can accurately forecast how much revenue the company is going to have over the next couple of years. Finally, some miscellaneous things. Employee efficiency, revenue per employee to continue to be best in the sector. Currently, each employee equates to $517,000 of revenue. Some of the other ones are a little bit lower in the SaaS space. Increased spending for the top 20 customers. This is the total TTM of their revenues. Some of them see this as a key risk for client concentration, but I see it as a safety net. I would be pleased if we went to increase TTM revenue averages from the top 20 clients from 1.2 billion to 1.15 billion. I agree, because if our top 20 clients are making a shit ton more money, that means they're using Palantir software, and we can have an obvious positive correlation between Palantir software and their ability to generate revenue, because Palantir is an operating system for their business. So that is a good thing, even though we're still not in the SMB space, which hopefully in the next couple of years will attack small businesses. But for those Fortune 500 clients, we want them to make more money, because that means our job is being fulfilled if our top 20 customers are making more money from the product. And that's pretty much it. That's what we're seeing for Palantir, and that's what we're seeing for earnings into today. Let's do one last look at the charts. I know you guys are saying that Tesla's falling off right now. What's going on with Tesla? Okay, end phase at 135. Wow, Tesla at 246. There's a lot of red on the left-hand side of my screen for small caps. Tesla CFO has stepped down. So there you go. There's your bad news for Tesla. I don't know if that's the worst news in the world for Tesla. I mean, it's not Elon stepping down. It's a CFO. So I don't know if that's the biggest deal in the world, but maybe the CFO is relatively important to shareholders. Opendoor is down 7%. Enphase is down 3%. Fubo is down 9%. Apple's down 2%. SoFi is down 2%. Uber is down 1.5%. Palantir is $17.84. Again, still, Palantir at $17.80 is still amazing, in my opinion. It was at $7 a couple months ago, so it's down 2%. Sell-off definitely going into earnings, which might not be the worst thing in terms of expectations. Tupperware is down. Robinhood is down. Neo is down. Amazon's down just a little bit. Meta, Google, Microsoft, Netflix. Look at this. There's all this red on the left-hand side, and then I scroll down, and then there's all this green. And all this green is basically big cap tech. S&P at 448. So we're seeing big cap tech and some of the regionals get a little bit of the rotation from the mid caps, because I think that the street is afraid that acceleration in inflation is going to happen. If acceleration in inflation happens, the Fed has to raise rates. If the Fed has to raise rates, these companies that are not that profitable, like SoFi, that's on the track to being gap profitable but not profitable yet, is going to suffer. And so that's probably the logic that we're seeing right there. Palantir now at $17.78. All right, that is it with me. That is it with me. CFO leaving is very bad. Okay, I see. I don't follow Tesla that deeply to know if the CFO is that big of a deal, but I guess that's not a good thing to shareholders. So that's not the best thing in the world. All right, that's it for me. It's going to be an exciting day. I have a video coming out in about an hour just talking about my earnings expectations as well. If you already stick to the live stream, you probably don't have to watch that video. I'm in the park. I'm outside. So if you want to see me talk outside, you can watch that video. But look, today is the day. Today is the Super Bowl for Palantir. I do not expect earnings to hit it out of the park. In fact, I fully expect a sell-off. I will be happy if there's not a sell-off, but I expect it because the valuation has jumped dramatically over the past couple of months, and the growth has to be there to match the valuation. I don't know if the growth in Q2 is going to be there to match the valuation. And as a result of that, I am positioning myself to mentally expect a sell-off. Now, in terms of what I'm doing with my portfolio, I've said this every single day for the past 2 months. I'm not selling my shares, because to sell my shares because I expect a sell-off means that I think I can time exactly when to get back in on the bottom. And I'm just not that smart. I'm not the smartest guy in the world. If you want to try to do that, that's totally fine. If you want to buy puts to hedge your position, that's totally fine. To me, my average is 15. I will be very happy to buy below 15 and continue to average down. So there is I don't lose a single ounce of sleep at night thinking about my Palantir position because I truly am in this for the long term. I think I understand the company deeply to the point where I have my developed conviction. And so has the valuation run up? Absolutely. Is the valuation justified? Given the growth that they're reporting Q2, maybe not. If it dips, that is a dip that I get interested to accumulate on and have more shares for the long term. If it doesn't dip, I'm here for the ride and I get to enjoy a more frothier valuation, maybe justified because of the growth. So that's how I'm playing this earnings. It's very relaxed, very carefree. I have zero things to worry about, which means it's more fun because I get to focus all my energy on covering the actual company and seeing what happens and hopefully giving you guys the best coverage that is possible for earnings. And that's pretty much it with that. See the Novo link with Palantir? I did see a little bit of the Novartis link with Palantir. So and the Novo link. So we'll discuss that a little bit more later today and see what happens from that as well. All right. Last thing I have for you guys as a request, please follow on Twitter. If you're not following on Twitter, the Twitter is in the description. Please follow on Twitter. It will be a lot of earnings coverage on Twitter. If you are not on Twitter, please check me out on Twitter. Is it in the description? I'm going to put my Twitter in the chat right now. If you can't make the live stream, there will be a lot of tweets during the earnings. And so I'll be covering it heavily. So please make sure to follow me there. And if you aren't on Twitter, then be sure to be here on YouTube, and we will be covering earnings for the most exciting company on the planet, one of the most important companies, I believe, on the planet. And it'll be interesting to see what happens in Q2 2023 for their earnings. Yes, on X. I mean on X, not Twitter anymore. I mean on X. That's it. All right, everybody. Thank you so much. 3:45 p.m. Eastern. Get your popcorn, get your drinks, get what you got to get. I'll be here, and it'll be time to cover Palantir Q2. I'll see you then.